I'm so tired of the lamestream media. It's about time we get down to the real news. Get involved, get loud, and think on the brink. Well, with so much of our news headlines being dominated by domestic news, it is sometimes hard to grasp the impact of the European crisis on the global and national economy. Let's face it, we have enough going on right here to pay attention to without looking across the sea, but then again, we have to, isn't it? You know, it's a global world now more than ever. We hear that, but it truly is, and we're going to talk more about that today so we have an understanding of what's going on in Europe and how does it matter, how will it impact our world right here. Our guest today is Harry Dent. This is Malcolm Out Loud. Welcome to the show here. And we call this show, this particular version, Our World Out Loud, because it really is a focus on our world and really what's going on that shapes our world. Again, I often want to suggest to you there is more going on that meets the eye, and that's really what we want to drill down today. Let me tell you about Harry. He's a New York Times best-selling author, economic forecaster, and Harvard MBA and Baker Scholar. Harry's written a series of books, but to give you a perspective of the thinking and where Harry is, in 1993, if you remember those days when we were all out spending money, the book he wrote was The Great Boom Ahead. Right? In 2008, the Great Depression ahead, how to prosper in the crash following the greatest boom in history. And his latest book, of course, is The Great Crash Ahead, Strategies for a World Turned Upside Down. Now, thus far, Harry has been, seems to be on it as an economist. We just hope this time he's screwed up a little bit. So, hey, Harry, how you doing?
Good.
I don't think any of us are looking forward to this, man, huh?
You mean the smartest investors and the best entrepreneurs like change. Change is an opportunity. So we have 4 seasons: spring, summer, winter, fall and winter, throughout our lifetimes, throughout our economy. So you just have to understand which season's coming up next. And we're going from fall, what we call the bubble boom stage, to winter, which is when you deleverage those bubbles and get ready for the next great global boom again.
All right, you're talking. So the mindset here is this business as usual, or is it not business as usual?
It's not business as usual.
All right. So I talk a lot about that, and I often talk again on radio throughout the country too about the fact that there are opportunities, and a lot of these opportunities exist when things are tough, when things are going not so good. That there really are opportunities. The pie changes, the industries are shrinking, companies go out of business, companies change. I find a lot of people, Harry, run into the corner and don't do a damn thing.
Exactly.
And that creates, I think, a vacuum, which creates opportunities for many people. I think there's a lot of wealth created in these things. You agree with that?
Yeah, I mean, 1% of the people has been saying in society made most of the gains in this boom from 83 to 2007. Now, those people are going to have the biggest losses unless they protect their assets. And everybody's thinking, oh, the government's going to prevent this. They will not. We'll sit there and say they will not prevent this. This is not just a European crisis. Around the world, baby boomers have peaked in their spending. They're aging. They're moving towards savings and retirement. They're not going to buy more houses. They're not going to borrow more money, spend more money, no matter how much the government stimulates. So we started the first crisis with our subprime crisis and our mortgage loans and stuff. Now Europe's public debt crisis is stimulating the second crash, and it's going to go from Europe, it's going to hit the U.S., and that's going to back up on China, and that's going to back up on the emerging world. We're going to see a worldwide downturn before this is over.
Okay, there are some interesting stats. I want to talk initially here, and I want to come back to more your thinking, because I think you have some interesting points here, as you were just saying. But let's talk about the euro right now, what's going on in Europe. Let's talk about first, what are the primary drivers of economic health, and are they the same for the American markets here, Harry, as opposed to the European markets?
Yeah, they're very similar. Since World War II, Europe, all European countries, United States, Australia, New Zealand, all made similar progress in GDP per capita. There's 2 things. There's progress in technologies, particularly the microcomputer and the internet recently, and there's demographics. We all had baby booms at the same time after World War II. They all peaked around 1959, 60, 61, Europe, Canada, United States, Australia. So all these countries are now peaking with the largest generation in history, because spending peaks in the mid to late 40s for people in the developed world, in Europe, United States, Canada, etc. So this is a worldwide crisis. Peaking in spending, slowing down. Now, we had this in the 70s and the 1930s. Every 40 years, generations spend money, then they don't. It's happening with all these countries. So it's not just a Euro crisis or a U.S. crisis. The U.S. triggered the first one. The Europeans are triggering the second crisis. But we're going to have a crisis in demographics and debt no matter what, because the other thing that happened, particularly in the last 2 to 3 decades, debt has been growing in Europe and the United States about 2 to 3 times as fast as the economy for 25 years. That's unsustainable. We can't even find a debt and credit bubble to compare to this in history. The one in the roaring 20s was not as great.
So this is unprecedented.
Unprecedented.
Then, what's happening right now?
Because the demographics move similarly, and then the baby boom was much larger than any generation. Here, Europe, everywhere. China, you name it. And the technologies all progress the same. So we are one economy, and we are tied into this together. And again, it's just different triggers. We triggered the first crisis. Europe's now triggering the second. We're going to go down if Europe goes down. And if both of us slow down, China exports 35% of its economy, and China's got the biggest bubble of anybody. Overbuilding homes, infrastructure, real estate. And when China's bubble bursts, so Europe, U.S., China, then the emerging countries that just shove materials and energy.
China thus far has been able to stay out of it. I mean, very quietly, but they've stayed out of it. But there are signs now that that's not the case ahead. What do you say to that?
Oh, we've been warning since April of last year in our newsletter that China's got the greatest bubble. They, like the U.S., we've been borrowing for decades. I mean, it's not government, private, trade deficits, every way you can possibly borrow and lever your economy and steroid it up. We've been doing it. Europe's been doing it too. Europe, you know, different countries have more private or public debt problems. China has been overbuilding. Their government's 50% of their employees, 50% plus of their economy. They've overbuilt so much that when their economy slows down, they're not going to be able to stimulate because they already overstimulate.
So when do we start to see the impact of a China slowing down to the point of what you're speaking about?
Well, I think that's the last card to fall. I think now you've got Europe falling apart here. I think early next year, Europe is going to come apart. Then the U.S. is going to come apart. So I think we're literally going to get a crash between January and the summer of next year, right into the election, which is very unusual.
Yeah, but perfect timing, actually.
And then China, somewhere in there by the summer, then China starts to feel it. And
last couple things on the euro here. I see just in the last day here so that the euro has fallen below $1.30 for the first time since January. So it's continuing its fall right now. Some very fascinating things going on in Europe right now. All right, so the LA Times comes out with a column the other day about are we witnessing the birth of the United States of Europe, which I found fascinating. It's not the first time you and I have probably heard this because we've thought about it, obviously. There's some interesting thoughts I want to bring out to you folks here in a moment. In 1781, the 13 states had come together behind a treaty constitution here in the U.S. that broadly resembles present European arrangements, okay, interestingly. Because many states were in shaky financial condition, their bonds had dramatically depreciated in value, undermining the confidence of European investors in New World projects, which was here in the States, of course, early on. Well, the Constitution of 1787 granted new powers to impose taxes and set up an analog to the Bank of England. Once it came into effect, the federal government moved quickly to create a national bank and paid the depreciated state debt. The reason I bring this up, this ended the credit crisis and established the credibility of the infant republic of what we're looking at today here. And certainly European financial markets, everybody benefited from this, of course. But a lot of the states didn't want to play. Rhode Island didn't want to play. I mean, they were very hard against it. North Carolina wanted nothing to do with it. And they held out. And so there was a lot of feuding going on with the states back then. It's not even talked about anymore. We forget that. But, you know better than I. This is, way better than I. You have to look at history to understand what's going to happen forward, yeah?
Yeah, and this is a revolutionary time, and Europe will come to something new. But right now, in a time where the economy is going to be so weak and all these debts are playing, it's going to be a hard time for them to hold together. The Southern Europeans have much faster aging demographics than the Northern, lower standards of living, lower work ethics, and all types of things. It's going to be, I don't see these two being able to hold together. They almost have to come apart and then come back together in another form, from my point of view. Because the Germans are not going to bail out everybody.
Well, that's what's happening right now. I mean, there's a lot of conversation who's going to bail who out. As I've said to you, we talked a little bit earlier, and the Poles and Czechs and other Eastern Europeans who've been the recipients of a lot of aid from the West because of communism and all. It's funny how the cards have turned. They're now being asked to bail out the West, and they don't want anything to do with it. What do you think?
Well, nobody's going to want to. And again, Germany is winning this. We've been predicting this. Germany says we're only going to bail out long term if we get extreme austerity short term. In other words, Germany wants short-term pain. That's the way it should be, just like Ron Paul. We should restructure this debt first, then move on long-term. So Germany's getting its way, but that does mean to me very clearly Europe's going into a recession. Europe goes into recession, it's going to hit our banks, and we own a lot of the credit default swaps that guarantees their bank's debt. It's going to hit us, and then it's going to hit the world. So I think Germany's doing the right thing, but it does mean a recession for Europe.
So right now that we look at things across the board, as we see 2012 coming right now, and as we sit here and you're predicting again Europe's real problem in the first quarter, and then you're saying China right after that is going to really surface.
The U.S. and then China, yeah.
U.S. and then China. And so then we have a calamity. I mean, we have a complete disaster.
We have a worldwide downturn.
Yeah, big time. And have we ever seen the likes of that sort of a downturn to that level before?
Well, not as worldwide as the emerging world, but yeah, the Great Depression. Again, we look at spring, summer, fall, winter. Summer, high inflation was the 70s. Fall, bubble boom, falling inflation. Now winter. Well, you had a fall boom in 1914 and 1928, the Roaring '20s, and then you had a depression.
Harry, what can people do right now as we see what's going to happen in the next year and a half or so? What can people do right now, and how can they prepare for this, number one? And two, what should we be looking at as we get into the 2012 election cycle?
Well, here's the first thing not to do. Don't buy gold and silver. Everybody's doing this. That was the solution for the summer season, high inflation. This is going to be deflation throughout history without exceptions. When major debt bubbles delever and the assets that go around them, you get deflation in prices. Gold and silver commodities going to collapse. Real estate's going to go lower. Stock's going to collapse. You have to harvest your assets. You have to literally sell stocks, commodities, any excess real estate, wait for prices to fall, then rebuy. That's what Joseph Kennedy did, made his fortune in the early 30s.
But if everyone's harvesting those dollars, what's that going to do? It's going to create a bigger problem.
Well, again, if you look at it from the positive side, if you get out of the way of this, you're going to be able to buy stocks, gold, beachfront real estate at maybe 20 cents on the dollar in 2 or 3 years. That's a bar. Who doesn't like a sale? But most people are going to sit there, just kind of go and listen to Warren Buffett and Obama and say it's going to be okay, and Timothy Geithner, and they're just like in 2008-9, their 401k and their real estate equity is going to be wiped out overnight.
Do you think Americans will get a sense right now, I mean, for real, in this next year and a half, that we're not going to get through another stimulus program that's not going to help our cause? Are Americans going to understand that?
Well, number one, most Americans are against endless stimulus. The majority's against it. The government's doing it because they have to save the banks. And it's all going to the banks. $2 trillion of the Fed all went into the banks. It didn't go to people, didn't go to us. So it's a desperate thing, and people are skeptical. I think the Fed's been on hold for now about 6 months. Since June, QE2. It's going to be another couple months before they can justify QE3. That leaves a gap in the economy for the whole 2012. Because this is a 6 to 9 month lag that this stimulus actually hits. So I think Europe melts down. The Fed, if they do stimulate, there's going to be public resistance to it, and it's going to be too late.
All right, fascinating. Harry, I could talk to you for days on this, man. I mean, you really have such a great insight. I appreciate it. Appreciate your view and your thoughts. I think people do need to pay attention because this is a lot more than just selling books at this point. There's real lives being changed.
This is not the time to listen to the politicians, Warren Buffett or CNBC, frankly.
Right. What about MSNBC?
None of them. Nobody understands this.
Anything with a BC at the end, right? So the great crash ahead, strategies for a world turned upside down. Be fascinating to really peel through this and see. Harry Dent, again, an economist, best-selling author. I like some of his thinking, sort of what he's predicted over the past 10, 20 years, sort of where we're at now. You may not want to face some of the reality, but I think there are things we have to sort of look at and face, and how we're going to deal with it on a personal level, a business level, and a governmental level. Again, wake up and pay attention, and we all have to do that coming into this 2012 cycle. Can't expect your neighbor to do it. You have to do it. So, Malcolm Out Loud, again, thank you for joining me. Remember, get involved, get loud, and think on the brink.